Hello everyone, this is Reggie Holmes from All Things Financial Cafe for your Wednesday morning update here on the markets. It is November 9th. Remember, this recording is for educational purposes only. We are not licensed brokers, so please seek a broker for investment advice. We are simply here to educate you and give you a guide of what we're looking at in the market. As we stated yesterday, we wanted to see the 200 be broken in the market. Uh, but we wanted to see it hold. Well, we got our break yesterday, and this breakage was very significant. It was nice to see, but anytime you get a break of a resistance line, which we consider the 200-day moving average a resistance line and a support, it tells you what's coming next. So what you want to do is see if you get a follow through day, which is a follow through day means there's volume and things that come behind it and it continues to move higher once it breaks that resistance. What you don't want to see is that it comes back below it. Now what happening here is that today, this morning, as we waking up and get going here, all kinds of things has happened with the euro in Italy overnight. The IMF director came out and said that we're in a very turbulent time of having a lost decade. This is huge. This is very huge. The market is reacting totally negatively, and what is happening is that the market is turning back to bearish. Well, this was nothing but a bear market rally anyway. But what this signals to me, or us at the All Things Financial Cafe, is that this thing is getting serious. And these are the same type of trading patterns of the last major fall that we had in the market in 2008. So be alarmed. I'm not saying that this is what's about to happen, but I am saying you need to be alarmed because this is the same exact pattern of things that happened back in 2008. And you know we are calling for a big drop in the markets early next year, sometime next year. Let's just say that we're calling for another retest of that 666 low, and I believe we might even go lower. It's very possible. So, is this the start of it? I believe this is the tremors of it. I believe this is the start, and I do believe things accelerate the second time around. So this could even be a deeper, much faster fall than the first one. So let's take a look at the charts real quick. This is the E-mini S&P 500. This is the futures. The futures contract that they trade overseas in before the market. We can see that it rallied up above the 200 yesterday, and it is felling this morning. Now today's close is important. Just because it's below it right now doesn't mean it's going to stay this way, but it's very important that we get back above this 200 today. If not, this can start the very process of our downward movement. But I take at this point, if we're long, we're going to get very cautious. You're going to pull back off your longs, cut your losses, take your profits, and be light if you're going to be long in this market. But I would start looking for both sides of this market, to the downside and upside, and I would start to lean my bias to the downside if it closes below this 200-day moving average. That's the E-mini futures. Now let me show you the S&P itself. That we actually trade. You can see it got above the moving average yesterday by a couple points, and today we are going to open down below it. So we really need to get back above this 1272.73 area. Sorry here. Once we get back above that 1272, then I would say we're going long. But as long as this market closes below this area today, and we see in strong volume in the market already this morning, it looks like this could be the start. The news is not going to get any greater. Of course it's going to be up and down, but this could be the definite start of a move that could be very nerve-wracking is what I want to use. I'm going to use that word for now. You can see we broke how the 200 was support, how we broke below it here in early August. We fell below. We've been trading crazy ever since then. So August, September, October. We're now into November. So that's 1, 2, 3 months, 3.5 months that's working here. 3.25 months, whatever you want to call it. that we've been in this sideways movement ever since breaking the 200-day moving average. Here the 50 crossed below the 200, which told you that we're still in a bear market. And then you can see here we rallied up. Late October we broke the 200. Again, a doji the next day, then a bam, right back down. We bounced off the 50 to test the 200 again. This is very important right here. It pops up, and then today we are back down. Now today the important thing is, where will we close? So I'm going to show you a chart of a friend that sent me this not too long ago, of the 2008 fall, 2007. You can see here we made a high for the 2007 high, and you can see the pattern that we followed. And then we went all the way up and we hit the 200 and we fell from there. Now let's look at the current move that we just had. We had the May high in the market, push back, bam, just like here, boom, bam, here's the big fall, bam, that's August that we just looked at. Here's the last few months. Here's the rally up to the 200. Same thing here, up and down, rally up, 200. We hit it a couple of times here and here. We hit the 200 here. We just hit it again here. Bam, look what happened next. Boom, boom. This is very significant and can be a very, very alarming pattern that could be forming in this market. So I suggest you get ready, because something serious could be coming. We're going to take off our loans, and we're going to go light here now that this has failed. We're going to look to short this market, and if this thing does turn out to be this, we're going to look for a nice fall to the downside. And there's plenty of things. I look for the euro to fall apart. I look for the market to continue to fall apart. So there's opportunities that you can ride this thing and not miss this fall. But again, this is just looking at this. This is just a process that could be happening, could not. This is the euro. You can see the euro. It had a head and shoulder pattern. Head, shoulder, head, shoulder. Shoulder, head, head. Oh Lord, I'm sorry. Shoulder, head, shoulder. Breaks out, then fails. Very alarming. Tries to get back. Tries to push up. Fails today. We break the low today of 136. We should see much lower prices. So let's be alarmed to this and pay it close attention, because this thing is getting serious and it could accelerate. We already know all the problems in the world. I know I've been a little lengthy today, but I wanted to get out the extreme urgency of this, what's happening in the market. And our big trade is the euro to the downside for next year. That is the trade we're calling. We're going out to June of next year and January of 2013, and we're buying puts. We're going to buy puts in the financial markets, and we're going to buy puts on the actual market itself. So those are some trades we're looking at, and I suggest you start setting those up, because if this plays itself out, it could be a very long ride to the downside. But there's always hope. If we close back above the 200 and we start to move, there's a good chance that this move down might not start now, because we do believe it's coming. But there could be a sustainedness throughout the rest of the year. But this is very alarming charts, and I want you to take heed to this. So be ready, be prepared, because anything can happen from here. Again, this is Reggie from All Things Financial Cafe. We will have another update throughout the day and at the end of the day today. So I'll talk to you later. Happy trading, and start preparing for some things. I know we always like to think nothing's bad is going to happen, but I want you to start preparing for some things that could happen in the future. Get emergency goods together. All right. So again, this is Reggie Holmes for All Things Financial Cafe, and I will see you later.